Hello, this is Josh Kahr at The Real Angle, and today we're going to talk about portfolio management with Ali Haidar. Ali, how are you doing today?
I'm good, Josh. Thank you for having me today.
Thanks for coming on board. So before we get started, you work at GIC, you're senior VP doing portfolio management for the Americas. Um, let's get some basic things out of the way. Just GIC. I think a lot of people who are not in the industry don't even know what GIC is. What is GIC? Let's start from there.
Great. So GIC is one of the Singaporean sovereign wealth funds. My role at GIC is to lead the America's real estate portfolio management team,
Got it.
which means we ensure our book continues to be divested and diversified and capturing good risk-adjusted returns, all while looking at the environment and the challenges in the environment. If you'd like to learn more about GIC, please visit our website at www.gic.com.sg.
Yeah, and and it's funny. A lot of people don't really even understand. Before we get into what you do specifically, a lot of people don't even understand what a sovereign wealth fund is. That it's basically the money of the government and the people of Singapore, basically being invested. I imagine to pay for pensions and that sort of stuff. Whereas the United States, we don't really do sovereign wealth funds. We Social Security is fundamentally a transfer from old to young. So it's a concept that we in the United States don't really have, and so a lot of people don't even understand that that's something that well, frankly, countries do. So
That's right. GIC's mandate is to preserve and enhance the international purchasing power of Singapore's foreign reserves under management over a long period of time. The primary metric that we use to evaluate the investment performance is an annualized rolling 20-year real rates of return.
wow,
Um, so it
that's
makes
a long timeline, 20-year rolling average.
correct. And that puts us in a position of strength when you think about investing in the real estate space, given that usually cyclical changes in real estate happen over a long period of time as opposed to short term investing between 5 to 7 years.
So in that way, in a lot of ways, the way you think about success, not to put words in your mouth, but it sounds more like you're acting almost like a very large family office if the family would be, say, the people of Singapore.
We, one could say that, yes, but it also means that we and GIC have to consider and always double down on our principles of maintaining price discipline and granular approach when it comes to diversification. As long-term investors, our strength is the long-term flexible capital that we have and the deep commitment that we can do with our partners. As a result of that, we stay aligned to our mandate as we construct a diversified portfolio that is resilient across a broad range of plausible economic conditions
Hmm.
that can reap good real returns over long term, but that can also adhere to the risk tolerance of our client. And that's key when we go to our investing and we go into the investing world.
Yeah, and so we're obviously you're favoring stability. It's long-term stability rather than a quick hit of cash that maybe looks great on the 12-month window, which makes sense. Now, you guys, you're obviously focused on the Americas. I imagine GIC invests all over the place. Not that you're talking about that today, but I imagine you have like a European arm and other arms, right?
That's correct. So in the US, we see a broad range of emerging bottom up opportunities with attractive risk reward across asset classes and strategies.
Right.
Our local teams are looking at quality bottom up opportunities with reputable partners that can generate stable returns over long term. For 4 decades, the US has represented one of GIC's most important markets. Today, the region makes up almost 40% of our investments, and we are the home of 300 GIC professionals.
Got it.
Over the last 40 years, the US market has gone through ups and downs, as you know, the
Sure.
dot-com bubble, the financial crisis, COVID, and more.
Hmm.
Yet, precisely amidst this volatility, this is when we see some of our best investments. Um, Americas for us represents both North America and South America. um,
Okay.
and and that coverage is a reflection of our flexible approach when it comes to our core belief in long-term investing.
Now you've said a few things that are interesting here. So first off, when you talk about Americas being both continents, I imagine then, and this is not meant to put you on the spot, but just to state the obvious, I mean, then you do have to think about political risk, about one country having instability issues. And I don't want to point fingers, but you read the news. I do too. Certain countries have issues, would be a nice way of putting it. So I imagine that also enters into your conversation, political stability, that sort of stuff.
Absolutely. We are in an era where there's continued uncertainty.
Sure.
The world continues to feel effects from persistent inflation, but also chronic geopolitical risks,
Sure.
um, while trying to grapple with other disruption. Um, Uncertainty for any given investor is a is an issue, but based on uncertain events, you can drive rewards. And as long as you are committed to your core principles and you play to your strengths, you can generate real returns in even in uncertain environments and geopolitical risks.
Sure. Now, product type is always an interesting conversation with real estate. I've been teaching real estate market analysis for a long time. I'm teaching at a Columbia again this semester. And it's always funny because when someone says they invest in real estate and I say what product types, often people are like, well, everything. And then I'll say, well, what about hotels? And they'll be like, well, not hotels. And so when we talk about product types and a group like yours says we invest over say a broad range of product types, what are the product types that you find you guys tend to go, what are the product types you're in, and are there other product types you just don't touch, um basically?
So it's a hard question to answer. Reality is there isn't a favorite product type among others. The way
Okay.
we look at investing is, as I mentioned, long term, which means we look for generic enterprise wide themes that we pursue, and accordingly, our conviction in those themes drive our investing. For example, technology has been a core theme that we've believed in for the past few years. And as a
Hmm.
result, we follow where technology would go in the space of real estate, whether that's data centers or antennas. It, it,
Right.
it doesn't matter what asset type it is as long as technology is driving the theme of that particular investment. Same
Sure.
thing with sustainability, same thing with green technology, and
Right.
on and on. And so for us, it's important to remember our core principle, which is long term investing, which focuses on preparation and not prediction. We cannot predict what the future looks like in a particular asset class. So our emphasis is always on diversification with the discipline to invest when risk rewards are attractive. And that is driven by thematic approach to the market as opposed to scenario playing in a particular asset class.
Fair enough. Fair enough. So let's talk about sort of roles and responsibilities, like the portfolio management team in the United States, which you're sitting on. How big of a team are we talking? How many bodies in a room would you say are the portfolio management team?
Um, the portfolio management team in the US is about 7 people in total.
Okay.
Um,
And the way you guys organize yourselves, is it like, okay, Bob handles South America and Sally does office, or like how do you sort of how do you think about managing that?
we manage across sectors and across properties.
Okay.
We look at the portfolio from a top-down approach,
Okay.
while the investment team looks at investing from a bottoms-up opportunistic approach.
Okay. And so obviously you're collecting a lot of data because that's kind of what you do. And I imagine you then come to conclusions about, hey, we like this product type, we don't like that product type, or what have you. Um, how is that information that you're collecting and concluding on? How does that then feed back to the investment team? Like, what's that circle look like? How is that information communicated?
So and I think it's an important question, and I think it drives into kind of how the function of the asset management and property management or portfolio management team is structured. Um, for us, both functions are separate, but they roll into a single department.
Okay.
The most important piece is constant communication on performance, strategic asset reviews, valuation, and then most importantly, exposure. So our communication with internal stakeholders is what drives the knowledge that goes from being just information to becoming powerful set of tools for the investment team to act upon.
Got it. So if hypothetically I'm in the investment side and I'm like, hey, I've got a great retail deal in Dallas, somewhere in that conversation, your people would then say, well, we are or are not hot on retail. We are or are not overweighted in Dallas or the Americas. There's some conversations going on about weightings and exposure and stuff. Hopefully before I bring you the deal, because obviously you don't want me investing a lot of time looking at something if the answer is, well, we just don't have any more money to put to work in this market or this product type.
Our team spends a lot of time showcasing our current performance, both
Sure.
from an asset class perspective and an exposure perspective, to the investment team to guide them and provide them with the knowledge to conduct their business.
Right.
At no point in time do we come and say um, we're overweight on a particular asset class. We don't allow the ability and the restriction from an asset class perspective dictate how we invest. We look at it from a bottoms up approach. If
Okay.
the deal on its own makes sense, the metrics from a risk reward perspective are attractive enough, and it fits within our global mandate of achieving real returns over a prolonged period of time, and it fits the bar when it comes to our hurdle rates and our benchmarks, then that deal passes to the investment committee. From there onwards, decision is made. Our role is not to uh, so to speak, put handcuffs around the investment team, but our role is to provide access to information
Okay.
from what we're seeing across the portfolio to help the investment team make better educated and strategic decisions for GIC.
Okay. No, that's interesting because I mean, different firms have different philosophies on this. Some firms are just like, hey, we don't want to have more than X percentage allocated into this market. So even if you bring me what we all agree is a great deal, just no, you know? And other teams, like I guess the way you guys are approaching it is if the deal makes sense and the risk reward profile makes sense, et cetera, even though it might mean you're overweighted in retail, it's like, well, we're overweight in retail, but it's such a great deal, we'll deal with the overweighting, so to speak. Okay, that's interesting. So, I live and breathe in Excel. I do a lot of spreadsheet in my work. Let's talk about tools. Let's talk about what you're using to manage this stuff. I mean, obviously you have spreadsheets, but like, what are the tools you're using to manage these portfolios to do your analysis to come to your conclusion?
That's a very good question, Josh. Thank you for asking that. So let me take a step back first. I think it's
Please.
important for um, the audience to understand what data science means. Um, Data science is the study and analysis of data to extract meaningful insights which can support business decisions. It
Hmm.
combines math, statistics, programming. Now we're seeing the emergence of AI and large language models, all
Hmm.
of which requires specific expertise to uncover actionable insights through the data. Now, those are there to just guide you with your planning and your strategic thinking. However, you have to break it down into kind of different silos when you start to think about what does that mean from a portfolio management perspective. The first principle that we have to look at is what is happening from a data ingestion perspective. Um, we tend to forget that data is as good as what you see, and data analysis is as good as data ingestion. And the biggest problem that we've had in the industry for as long as I can remember, has been the quality of information that we receive from either our partners or the market. That piece is where we spend a lot of our time trying to structure the data that historically has been unstructured, that historically has been not well defined across partners and across asset types. And as a result, we utilize many different tools, most of which are proprietary and developed in house,
Sure.
to analyze and structure that information. Now, to dive in a little deeper, um, some of the things that we do include putting together a data dictionary that sits on top of the data set that provides some sort of governance, so that, for example, a definition of NOI in retail is the same as definition of NOI in multifamily. And while there are nuances that exist that, from an industry perspective, inhibit us from standardizing 100% those definitions, we do our best to converge to a mean that allows us to then utilize the data across the portfolio to have a harmonic approach to performance. Those are things that we spend a lot of time on. In terms of tools that we use, there are many tools that are at our disposal here, be it uh, BI tools, business intelligence tools,
Sure.
be it data cleansing and data cleaning tools like Ultrix and others. All of
Right.
this is available for us to use, as long as we're using it with the purpose of streamlining unstructured data into data sets that are reliable.
Well, and the unstructured into structured conversation is interesting because one thing you've mentioned a few times throughout the conversation, which I've not pulled out of the conversation yet, is you've talked a lot about partners. And so I imagine most of the deals you're doing, correct me if I'm wrong, you have an operating partner who deals with the day to day of running the assets, so to speak. And you guys are, for lack of a better term, you're the money partner, right? You're bringing in the capital and you're using a local operator. So if you're talking about taking unstructured data and making it structured, if you're talking about data and cleaning it up, I imagine part of that conversation is also just working with your partners to make sure that at least the first pass at cleaning is them giving you data in a format that you can work with and what have you. So when you're sitting down with a partner for operations, you're giving them some sort of dictionary, you're giving them some sort of like what's that look like, I guess.
That's, that's a great question, and in fact, majority of the work that we do includes deepening our relationship with our partners. Streamlining data operations can be done in two ways. One, you create all the tools in the tool shed to allow for the absorption of information in a constant way. But
Right.
then two is really working with your partner to explain to them and constantly remind them of the quality of the information that you require. For us, we are a general partner. Excuse me, we are a limited partner. We work with our general partners to invest capital into the real estate market in the U.S. Um, and into other markets in the Americas.
Sure.
As a result of that, the most important key is that our partners understand and have a good expectations of what our data needs are. So when we structure our LPA documentation, when we sit down on the negotiating table and have a discussion on what does reporting structure looks like downstream, all of those are made abundantly clear at the beginning. We put them in our documentation. We provide templates. We provide data dictionaries and examples,
Sure.
and we work with our partners throughout the reporting cycles to ensure that there's a clear understanding of what we're looking for, but that also we are receptive to some of the challenges that they have and that they face in collecting some of these data points that we require. And so the process um, is not one size fit all. It's always going to have some nuances, but if we are able to um, target and capture 90% of the things that we look for across all the partners, it gives us depth and agility in our data that most in the industry do not have.
No, and that's I think that's interesting because I mean I've worked as an operating partner on my side, and the conversation of reporting is always an issue. Because sometimes I'm dealing with investors or an investment group that doesn't even understand necessarily what it is they need. because people like to throw around words like, well, I want transparency. It's like, well, that's great, but like, you don't want all the information, because no one wants all the information, because then you have to read all the information at the same time. And then also saying to me, well, you just want everything. It's like, well, but then I have to collect everything. And why am I collecting data if you're not going to need it? So there's always that conversation, that push pull of like, I want to give you what you need. I don't want to just drown you in stuff. I also don't want to be spending all my time just cleaning up data. Like, how do we manage that? um I imagine there's probably an onboarding and education process, especially when you're bringing new partners on board. Probably if you have a partner you worked with for a while, they kind of know how you roll. But with the new guy, that's got to be an educational process.
Absolutely, and it's an educational process even with partners that we have harvested relationship with for a very long time. We truly believe in committing to long-term partnerships. We work together with our partners to develop the best possible um, ways to ingest data. Our purpose here is not to overburden our partners with requests on data, but it is simply to have a good look through from the investment level down to the property level. So that we could be educated enough as we continue to grow the various platforms with our partners. And that's key in the way we invest over long term. We truly believe that enabling our partners to be the best that they can be in the various asset classes that they invest in is essential. But we cannot do that without understanding and having a deep understanding of what does the portfolio look like,
Right.
where are returns coming from, how exposed are we to a particular tendency, and how vulnerable is the portfolio to a particular change in the macro economic environment. I would add a last thought here that I think is also essential, that is usually from my experience outside of GIC also kind of uh, you know muted, but is very important. Investing by definition is taking on risk for a particular reward that
Sure.
others are not willing to take. For GIC, the total return for its portfolio is compromised of market, which is what we call beta,
Hmm.
market returns,
Sure.
and then active, or what we call alpha returns. And so as a result, the beta is always going to be kind of the stable component that comes from the fluctuations of the market, whether that's inflation, interest rates, and others. Um, but the alpha piece is a direct result of us playing to our strength, which includes our ability to look at capital from a long-term perspective, which includes our ability to be flexible when it comes to commitments with our partners, but it
Right.
also includes our deep understanding of what the portfolio is telling us from an intelligence perspective. And so when we work with our partners to onboard them, onto our platform, and pushing them to kind of expand the mandate that we've agreed to together, we're trying to also help them upgrade their ways of understanding and acknowledging that power of information comes from the knowledge of what exists within the portfolio.
Yeah, training them and helping them get smarter, because it's funny. I mean, I have a background in consulting, and the blessing of consulting is if you work with five different firms, when you go to the sixth one, you can at least say, well, this is how those five guys did it. So maybe you want to do some of those things. That's kind of the heart of consulting, is just spreading that knowledge. And in a lot of ways, it sounds to me you're doing the same thing, but from the investor point of view of saying, well, this other hotel operator we work with does X, Y, and Z. So have you ever considered doing, it works for them, it makes them money, so maybe it'll make you money. Like, let's have that conversation go both ways. That is a much more intelligent investment partner, frankly, than a lot of investors I've worked with, because a lot of investors I work with are just like, well, here's the check, make me money. And it's like, well, obviously, I mean, that's the goal, but it's always nice to get some feedback and something positive. I was speaking to an investor recently who was asking me a lot of good questions, and he apologized for taking up so much time. And I said, well, but they're good questions you're asking. I don't mind good questions. Good questions are interesting. They made me think about it. If you were giving me bad questions, then obviously I'd want to end the call, but like, keep asking me insightful questions that make me think about my business. I'll do that all day long. That's a positive. Um, it's interesting. It's interesting. Um, so, I was going to ask you before we got on the call more general questions about your thought about interest rates or what have you. But the reality is, you're taking such a not broad, but you're taking such a long term view of markets that asking you your thoughts on interest rates going up or down, while you may have them, it's not really relevant. Because if you're thinking of 20-year rolling averages, it's more like, well, what's what do we think the 10 year is going to be at over the long term? That's a lot more important than does the Fed cut rates or, the next 12 months? Like, who cares? It doesn't really move your needle. Um, I will ask this one question. It's a question I always like to ask, which is, um, any surprises? I mean, you've got to see things go not good or bad, but just weird. Things that you wouldn't have expected. So, like, what are some surprises you've had in your role in doing portfolio management work?
It's a good question. And the reason why I think it's a good question is because we don't talk enough about after the fact. You know, we tend to in the industry, and this is broadly speaking, not GIC specific.
Sure,
We tend
sure.
to make an investment, do an underwriting, do our due diligence, make the investment, and then hand it off to some team that will just manage that, and we move on to the next deal.
Collect rents, pay bills. Sure.
Correct. And then we get surprised down the line when there are some real macroeconomic challenges that arise, whether they are contained to just one country or global, depending on what they are. We are surprised that the performance of the portfolio starts to fluctuate accordingly, and it is impacted accordingly. So, with that being said, uncertainty is given for any investor, and the events in particular of the past few years have intensified this uncertainty to a profound level,
Hmm.
where challenging almost every assumption has become part of our thought process.
Sure.
You've got domestic political challenges in several countries. You've got
Right.
rapid technology changes. You got societal changes with the work from home components that we have to consider, and demographic changes that are coming as a result of that. And then you've got climate change, that is a big topic that is unpredictable and intense in its own way.
Right.
And
By definition. I mean, yeah, it's unpredictable. Yeah.
unpredictable. Then, of course, you've got the emergence of generative AI, which is causing a little bit of distortion in the market, and
Hmm. Hmm.
that is, an additional concern that comes out. So all of these create that unprecedented uncertainty that translates into a wider range of possible outcomes. If you look at the cone of possible outcomes for your investment, it becomes much wider, and so as a result, pitfalls and windfalls, for that matter, now have an equal weighting. You have to consider a tailwind as much as you'd have to consider a headwind.
Sure.
Um, and there isn't a map that exists for investor to navigate this particular terrain. So old theories and typical models do not capture sufficient history to allow you to do that. And so long answer to your question, when we peel all of this back and we go back to an underwriting model that is as simple as a 10-year cash flow, the
Hmm.
first assumption that we always slap on top of a model is, what is my growth rate assumptions going to look like? And historically, as you know, the industry as a whole has always been, well, it's what inflation is dictating our growth rate should look like.
Sure. 3% a year for 10 years. Yeah. Sure.
Correct.
Whatever. Sure.
But how often has that really panned out? And if you peel back the sufficient history, you will realize that it's never linear.
Right.
And so to me, what surprises me in today's kind of investing world is that we still see um, you know opportunities presented to us from various different places coming with that type of mindset in the investing world, and that's surprising. We haven't yet been able to adapt to a new norm that allows us to be a little bit more thoughtful about what, for example, growth rates are going to look like, what discount rates are going to look like. We haven't really seen from investors a more depth analysis on a bifurcation of returns. IRR is a number that is as good as any number you throw on it. But
Right.
what does that mean? How do you really bifurcate those returns between cash flow from operations and then proceeds from a sale? And
Then
why?
the risks are different on
Correct.
sale. Sale is exposure to the credit markets. Operations is tenant risk. They're different. They're
Just
different.
two different
Yeah,
exactly,
yeah,
different
yeah.
risk criterias, and as a result of that, you have to split kind of how you think about it. And so, going back to your original question,
Mm,
this is what surprises me. And speaking, putting on my kind of consulting hat on, because I too have spent a decade in the consulting world before joining GIC. This has been kind of the topic of discussion among all of the clients I worked with in the past.
mm,
There's a um, real issue with the way we underwrite when it comes to long-term investing. So, you know,
yeah.
the reality is, if you take the bottoms up approach and risk reward kind of approach to opportunistic investing, and you practice scenario playing in your portfolio and your investments, and you actively manage risk across the portfolio and look for market vulnerabilities, you're able to identify those thematic changes, whether it's growth rates, discount rates, cap rates, changes in expense ratios, etc., much earlier in the cycle, and it gives you an advantage.
Get ahead of the problem, so to speak.
Mhm.
No, this is all solid thinking, and unfortunately requires perspective, which is what a lot of people don't have. A lot of people, in my experience, are like, well, and myself, I'm guilty of this too. I mean, I focus on doing apartment deals in New Jersey, so I have a lot of strong opinions about that, but that doesn't mean I have any perspective on multifamily in general. And, you have to sometimes step back and say, well, that's great that I'm making X in this market, but how is that actually comparing to everything else? And if I'm overperforming, am I lucky? Or is it that I was actually smart? And, people have a natural tendency to think if they make more money than expected, they were smart, and not that just, well, you got a great tailwind and, sometimes you just get lucky. Um, it's all good stuff. It's all good stuff. Well, look, this has been a wonderful conversation about um, risk and risk management. We've already talked about the website for GIC. Again, one of the bigger entities that your average person just doesn't even know exists, because why would they? Unless this is what they do, or maybe if they're Singaporean, they have an interest. They have an interest. Um, cool. Well, then I will just leave it there. Thanks again for joining me on the Real Angle, and you have a great day. Much appreciated.
Appreciate it, Josh. Thank you for having me, and have a good day yourself.
Thanks.